Welcome to the new Barbarians podcast. I'm Bill Mann.
And I'm Mark Connors. And we're here to deliver insights on how current market events impact the traditional investment portfolios of stocks and bonds that Bill and I traded on Wall Street. Today, we see digital assets as the next frontier for finance and investment.
We're also here to explain how cutting-edge tools like AI and disruptive tech are the new barbarians at the TradFi gate.
So instead of Mike Milliken's innovation on debt financing with junk bonds, today's barbarians at the gate are changing the landscape almost daily across regulation, legislation, and finance.
So hit the subscribe button and let's cut through the noise together. Welcome to episode 18 of the New Barbarians podcast. Today is Monday, April 28th. The podcast will hit platforms later today. Bessent's speech and IMF cutting rates are the two focus points. April 2nd, Liberation Day is still being digested, and with the impact unknown, how can we price this in?
Good questions, Bill. Let's give it a whirl.
Last week, markets ended the week up strongly as Trump's rhetoric around tariffs and firing Chair Powell softened substantially as the week progressed. Without evidence supporting his statements, Trump has asserted that trade talks with China are progressing, and he does not see the current 145% tariffs as permanent. This led to a recovery of over $4 trillion in market capitalization and underscores the profound impact of policy decisions on investor sentiment.
Yeah.
Another soundbite is 97.3% cheaper than ChatGPT-4. There are now rumors again emerging that DeepSeek is building a next generation AI model, R2 with Huawei chips, with twice the model parameters of R1 and allegedly the world's cheapest for enterprise use.
Now, why do those model parameters matter, Bill? I've heard people say that once you get over 180,000 parameters or 2 million, it doesn't matter. That it's more about the structure or architecture than it is about the power.
Sure. I think that there's a good comparison with standard statistics. You can usually get the same results with sampling, and if you find the right features to sample and you sort of shrink down the better contributors to the model, you don't need as much. But why it's significant here is because it's DeepSeek R1 and already very cheap, they're actually increasing the parameters. So it should get better. I think you do see, the law of diminishing returns with these types of things. But it is significant because if it's really cheap and you can double the parameters, like, of course, all of this is consistent with our belief that, the price of this intelligence is going to zero.
Do we have to footnote our first guest when we do that every time?
We probably should, yeah. That was Tharsis Souza, who actually wrote the book Taming LLMs, who provided that ad hoc quote for us, and we use it on a regular basis.
Well, all right. I didn't want to interrupt you, but I thought that was worthwhile given what you've written. And, I've been slowly digesting your couple of papers. And when you go through it, it's not just looking at heft and breadth of power. There's a lot of other factors to consider when using or choosing LLMs, it sounds like.
Yes. And, you'll probably hear me complain on a pretty regular basis, but I've broken, $100 billion model many times. So they're very impressive, very powerful. You'll also hear me, speak very highly of LLMs, but at the same time, they break, they hallucinate, they have problems.
So hallucinating we get, but what does breaking mean? What's an example?
Yeah, that's my own definition. Basically, at some point after a long enough chat, if it's complicated enough, it just stops responding, and it will keep promising you, "Oh, this is on the way. I'm almost done," and then you can go for days with an LLM that will just keep spinning and giving you these nonsensical answers.
Got it.
Anyway, the quote about DeepSeek does lead to another soundbite, and I'll just read it. Self-reliance and self-strengthening. President Xi Jinping, we must comprehensively advance technological innovation, industrial development, and AI-empowered applications, which I think is just in direct response to the tariff wars and China's desire to bring its AI capabilities onshore and no longer rely on the U.S. and companies like NVIDIA with their even with their less sophisticated chips.
Mm-hmm.
Last week, the bond market continued to exhibit high volatility, with yields increasing to 4.25%, which is obviously bad for borrowing costs and can lead to equity declines as well. Consumer confidence is dropping. There are a few statistics around that, but a University of Michigan survey reported a 32% decline in economic expectations since January. So really since the election. And that's just one quantification of the uncertainty that everyone feels about.
Totally. And Bill, on that bond, the 4.25, was that the 10-year?
I believe, yes.
Yeah, and so you're right. So I think the 10-year price rose, nicely, one of the bigger gainers, and then I think that yield dropped down to 4.25, from like 4.50.
Yeah, I was going to say 440, but yeah, 450.
Yeah. 4.40 on the week. I think you're right. But you're right. The borrowing costs are still way high. Everyone kind of was all excited about that. But we're paying more than Italy. We're paying more than some non-G10 countries. And it's, good news, bad news because of our hot economy. But, we'll talk about that later. I don't want to jump ahead of the call, but even though it declined, like you said, it's still high, like you said, and it is going to be impacting all but the best equities. That's why you're seeing the Russell drop, because borrowing costs on these levered companies, if growth drops, man, they're going to be on the wrong side of history.
I'm certainly not celebrating yet, although I will rattle off a few more market updates. So, basically we do up, down, up. Everything's all clear. The dollar's back up. Yields are down. The VIX is down. VIX peaked on April 8th at 52. It's fallen down to below 27. And then equity markets today, Nikkei is up. Hang Seng's flat. Europe up very modestly. And then futures in the U.S. are basically flat. Gold is up modestly. Oil's flat. And then Bitcoin and ETH. Bitcoin's up 1.77%, depending on how you define today. Yeah. But yeah, like last 24 hours or, even over the weekend, it wasn't up much more than that. But it looks like crypto's doing well again. XRP's actually up 3%. Not sure exactly what these deviations mean, but, Bitcoin dominance continues. And with that, we will let Mark take it away with the scorecard.
Yeah, as Bill said, it was a big week for risk assets in general. But let's get our scorecard up. But surprisingly, with the folks that are still saying that Bitcoin is correlated to Nasdaq, we're gonna again say sorry, folks, not the case. And so that's my cheat sheet on the economy, which we're going to come back to. So here's our little market scorecard. We like showing over 3 different time frames just to show you how we got to where we came from. Look at the week. Bitcoin up 12%. Gold down after hitting as high as 3,500 intra-week, but down on the week. This is what everyone's looking at. And this is obviously what everybody wants, is a higher equity market. But you're still seeing big bands of confidence from Wall Street strategists, as low as 4,200, as high as 6,200 on the year. So no one has an idea. But on the week, you're up. The reason I mention that is, will it stay there? Who knows? But big week for equities. And you'll see that, even credit increased, high yield. The 7 to 10 year ETF, they're up 60 basis points, like when Bill talking about the yield dropping down to 420 or 4.25 rather. Definitely bonds up, yields down, and then oil down a little bit. But take a step back. Where are we? On the year, this one over the right, don't worry about the month, but on the year, we're down 10% in NASDAQ, 6% in the S&P. And I think the year really shows where we are. It's a better characterization of where we are going forward. Because Liberation Day surprised people. That was April 2nd. The IMF had to revise their January outlook in April for growth, which we'll touch on. So the whipsaw we saw last week is exactly that, a whipsaw. And even on the month, equities flat, NASDAQ flat, S&P down 1.5%, really does not characterize the industry or investor. As Bill said, consumer sentiment down 30%. You have, again, we're going to touch on Best in Speech, which we're going to position as, I think, a top 10 speech in the U.S. on economics and on monetary policy. Even though he's a head of the fiscal arm of the U.S. government, he basically said, I'm in charge. This is what we're doing. Everybody else is wrong. And by the way, it's not us against the world. It's us with the world. So it's a Bretton Woods. He actually uses it, mentions Pax Americana, Bill, for people who want to, throw that. I don't know which AI model you would use to get an idea on a flavor for Pax Americana. Would that be ChatGPT, or would you throw it at?
I think I would use Claude, actually.
Okay.
If it's euphemisms and sort of language-based quotes, I think of Claude as maybe less quantitative, whereas Gemini would be the most.
Okay. So folks, make sure you use the right model. Otherwise, you might get the wrong answer. So now we're going to look at currencies. And so back to what we said about, Bob's your uncle, everything's back to normal for the U.S. on the week, dollar up, yum, yum, but it's still down 8% on the year. And that's what I think, that's what is more indicative, why I'm saying the year-to-date data is more indicative of how industry and government officials and consumers are acting. Bessent wasn't happy with the 70 basis point rise on the week. His speech was looking at the year-to-date data. And we'll, again, touch on a few points on that later.
And then, Mark, the peso's up. Any comments about Canada and Mexico in particular?
Yeah. There was a gal on this morning, Kellyanne Shaw, who was I think the deputy national either trade advisor or on the economic council with Trump in Trump 45? That's what they call him? Yeah. In his first administration. And she made some good points. She said tariffs, it's going to be years before we have agreements, not weeks or months. And then she did a great job, I thought, for me, of saying it's not just tariffs with a broad stroke. There are 10% tariffs across the board that he came out with, and those are for everybody because the government, the U.S. wants to chip away at its $1 trillion trade deficit. So that's level 1 tariff. Level 2 tariff is you're a bad actor. You've been doing either currency manipulation or bad faith trade or supporting or dumping like China did with steel. So we're going to hit you with 46% tariffs. So that's level 2 for not really about an imbalance. It's about a bad acting, or you want to penalize people for bad trade practice. And level 3 is what she calls sectorial. It's a division of trade that is a national security, like chips with China, where we just have zero appetite for being on the wrong side of that. And we have to onshore or reshore those types of manufacturing. So what that assessment gave me was that this is not going to be done and all of a sudden say, just kidding, we now have what we want, back to normal. There is a long-term plan here across those 3 verticals. And back to your question about Mexico, Mexico is part of that first bucket and a little bit of the second bucket.
Right.
So maybe there was some relief given there. I'm not sure. But also look at where the peso was. Where was it? Okay, yeah. So it is up 7% year to date. I think on a 1-year basis, if I roll out, it was down as much as like 18%. So a lot of whip. Yeah, it's a pretty volatile one. And Canada obviously has elections going on. A different animal. Not sure how the manufacturing of cars or other industries will be handled. It's obviously energy is a big export for Canada in raw and finished product that we use here, especially in the Northeast. And so being a Northeasterner, I kind of want to make sure that doesn't get messed around with too much.
Yeah. So interestingly, this month it sort of works out that month to date is since Liberation Day, and then year to date is I guess before and after inauguration, but we may want to keep track of things before and between these different dates. But one thing that does jump out to me year to date is USD down 8.3%, and then the Chinese yuan flat.
Yeah, because they control it. It's not a market currency. It's a command and control economy. So they're trying to devalue. We showed that chart where their property prices are rolling over, and this is where supposedly people say Besson is putting his size 11 wingtip on their neck, trying to choke them into concessions because they have a slowing economy, and in reaction they're trying to and successfully bucking the trend of appreciating of current currencies against the dollar. Yeah. So yeah, that does stick out. Thanks for highlighting that.
Yeah, and then this will be interesting just to see USD versus other currencies. But that is, in theory, better for the trade deficit with China?
It should be the fact that on the year, the exchange rate versus yuan is unchanged. So that doesn't help or doesn't change us, but obviously relative to the world, it's good for China, yes, because they're not expensive versus the dollar, and other manufacturers are.
But yeah, USD is down 8.3% versus the basket.
Versus the basket, which the yuan is not in. Okay. So the basket is euro, yen, Swissy, Canadian loonie, pound sterling.
Okay.
Yeah, and back to Besant's speech, man. He does not hold back talking about China being a bad actor. It's amazing. So let's give some love to the digital asset world. And the reason I brought it up today in particular is that we've been talking about Bitcoin dominance. It was leading all digital assets higher on the month, and that changed over the weekend. And little Solana has picked up, and XRP picking up a little bit. So you're gonna have it. I am definitely Bitcoin first, and for the majority of purposes only. I think there's a place for multi-coin trading by institutions, absolutely. But there's
And
little
ETH is now
doubt.
flat after being down not quite 20%, but 18 or
Yeah,
something.
on the month. But yeah, Ethereum was. That's a great point. Yeah, so it still lags. It's got, as people say, middle child syndrome. It's not the big brother of Bitcoin, and it's not the shiny, fun little brother of Solana.
Yeah.
It's kind of stuck in the middle with its own issues. However, I do think that all layer ones and other protocols will lift on the promise of deregulation, which is happening. Atkins from the SEC isn't in a full week yet, so we haven't seen that coordinated effort yet. They've been acting, without a chief here since Trump has been inaugurated. With great people like Hester Peirce, running initiatives, but still without the mandate from El Jefe, who is just ensconced this week, and is a digital asset. I would almost call him native. He's been in it for a few cycles. Hey guys, if you got anything out of that last segment, don't forget to like, comment, and subscribe, as it really helps us grow the podcast and bring you great content. Thanks for the support.
And I feel like I've now been indoctrinated into the crypto world. I did attend my first crypto conference last week. The AIMA put on the digital assets conference, which I guess it was interesting to learn about. And a few years ago, I guess they started doing it to basically get together stakeholders in this space. So within alternative investments, so just call it hedge funds plus, auditors, lawyers, all of these stakeholders basically needed to get together and define the rules of the game. So how do you value these assets? How do you audit crypto? And it was pretty eye-opening to me. I think I can bring out a few sound bites, and maybe I'll do the first one last, because I know we want to talk a little bit about that. But one thing I was happy to hear about was the breakdown between the correlation. People used to say that Bitcoin or crypto were like levered NASDAQ or levered Mag 7. I did notice that a lot of hedge funds are kind of chasing allocators. It seems like the money flowing into the alternative investment space is slow. And then, there were some breakouts and things that I think confirmed why. Counterparty credit risk is an issue with a lot of these different trading venues being overseas and, obviously unregulated. But with the big headlines that we see every once in a while with, hacks and other things like that, I think that the incumbent players view this as just a normal risk of doing business. So if you want to trade perpetual futures, you have to go to these other exchanges and, do your best to understand and get comfortable with things like counterparty credit risk. But I did hear a lot of people say, "Oh yeah, hedge funds were kind of the Wild West in the '90s when they started off, and that's kind of like this now." But I actually was an auditor of hedge funds, at least in the late '90s, and I think the institutional grade protections were there, and it seems to me like there's a bit of catch up still, just because of these issues.
Mm-hmm.
And then, yeah, I guess a couple of sound bites I'll also add are, one thing, if you're uninvested in Bitcoin and you miss the 3 or 4 best days of the year, you will miss the majority of returns. So I'm glad to be a long-term Bitcoin holder now. One thing that I didn't realize until someone threw out this statistic is, the drawdown of 78% in Bitcoin between 2021 and 2022, which I don't even think was that long. It was, maybe a half year, was basically the same as what Meta's drawdown was. So I like to compare Bitcoin and digital assets to, commonly held stocks and things that people don't complain as much about in terms of volatility. But, when you look at the NASDAQ and you look at some of these stocks, they're not that much different. And then the last soundbite was really just investing in digital assets is really like a liquid venture capital, a new asset class that needs to be defined. And I kind of like that concept. If you're investing in coins or investing in the crypto space, you are actually investing in venture capital like returns, which explains the high volatility and the very high returns that you can expect. However,
and Bill, hold that thought. It also explains why people aren't investing, because venture capital people would love to invest, and then maybe they get some leverage or turn to leverage, on certain things, but they don't have a mark to market. That's what they love. So I just want to put, it's like, it is enticing, especially if you're a liquid trader, because if you hold it and don't monetize that volatility, it's really, it's that classic picture of, me before trading crypto and me 6 months after, where, you look like you age like Abraham Lincoln. So, so that was, that's the good, bad thing. But anyway, yeah, back to your thoughts on it.
And then, usually to invest in venture capital, you have to be a limited partner, hold an illiquid investment in a vehicle that makes investments in startups. In this space, you can buy, you can go on Coinbase on your phone and start buying crypto. It's not the same comparison in my mind, although I kind of like it. Like, I like it conceptually to think about, okay, I'm investing in this new space. It's a disruptive space. It's kind of like the name of our podcast, like the new Barbarians. This is the new thing. However, I don't think that you have the same involvement that you would have if you're a limited partner. There's a lot of protection that your general partner provides you. They do a very good job of finding, you give your money and you pay like 2 and 20 to someone to actually find these investments. And in this space, it's kind of unknown who's in control, and it might depend on which coin and which protocol or which blockchain that you're ultimately associating yourself with these coins. And then there are stakeholders within the ecosystem of crypto that provide proof of stake or proof of transactions, and the companies that keep the ledger, and I don't know a whole lot about those players, but they seem more to me like the real venture capital investors, depending on what their upside looks like.
Yep. There's I met at the crypto ball that my former CEO at 3IQ brought me to, or went with him down January, and we met a former colleague who is a Solana validator, runs a bunch of validation nodes or validators on the Solana network. So they raise money, invest in the software around it, and that's part of the proof of stake consensus mechanism versus proof of work, which is what Bitcoin is and a few other chains, including Doge, and what Ethereum used to be. The proof of I mentioned that as a also segue, just not to talk about some of those, as you said, the different people in the ecosystem, but also you're right in that some of these foundations raise money. XRP raised money. Bitcoin never raised money, and so as an investor, I could see people saying, "I don't want to touch that. Why would I want to? Where can I add value as an investor?" It's really not antithetical, but it's a bit counterintuitive. One reason why people call it a commodity, a digital commodity that is, unique, out there, decentralized, etc. I do like the liquid venture capital because it prepares you for the nature of the asset, which is still evolving and emerging, and its applications likewise.
Right. Yeah. I think we're in agreement there, but it continues to be an interesting space, and I'm still learning. But I think for asset managers and players in the alternative investment space, part of what they were saying with this being a new asset class is it really just does need its own, valuation, control, safety, like metrics. And I can only imagine this crypto, the crypto ball or the digital asset summits were wild wests, just a few years ago. And I think there are probably more people like me walking around in suits and things like that. But yeah, it's still early innings and an interesting space. So.
Yep, I remember going to the Futurist conference up in Toronto, and there's people walking around with stockings, like in the kind of Harlequin outfits, in their pseudonymous, they want to be not known. They have gloves in their hands so you can't see any of their skin. Yeah, so there's a bunch of oddities out there, and there was a lot of money before the FTX debacle out there chasing, and then everyone retracted. We talk about there's the same $5 billion floating, sloshing around, different active managers in the space, and it hasn't really opened up. And I think that's still the case. I don't know if you sort of found that when you were at the AMA conference, if there were a lot of allocators there, or.
Yeah, I did. I definitely observed quite a few managers like sort of flocking to the allocators and family office types that I think just have a more open mandate, but at the same time maybe they're less willing to lose money for their family they're working for. So I think a lot of people are looking for like, have we turned the corner? Is this a safe space? And I think that with the regulatory regime and with the overhaul of the entire crypto space, like in the US, given the new administration, it probably is a matter of time before more and more capital starts flowing. So, I continue to think it's a good time to be involved. And I think that is, obviously before all the flows comes in, is a great time to be invested.
And I would agree, given the way the table's set from the executive order is now being followed through with legislation by the Genius Act and stable coins, which are still, I think, the most impactful aspect of digital assets, with the room to grow and the greatest and the breadth of impact, because banks can get involved. And when banks have a reason to, if banks see a margin opportunity, they're going to take it. And that's obviously, we're talking about global multi-country, multi-jurisdictional institutions. So that's a lot of investment. And the broader those on-ramps are, stablecoins are on-ramps from fiat to digital, then the easier it is for people to get involved. And it's, we saw a pop, as we saw in digital assets. Bitcoin ETF inflows last week breached $1 billion for the first time since the downturn in Q1. So that's very constructive. You're seeing, Coinbase come out with a Bitcoin fund for yield that they're going to be providing May 1. You saw the news with Jack Mallers leading a joint effort with Tether, SoftBank, and Counterfeits on a treasury accumulation plan similar to Michael Saylor's strategy / MicroStrategy effort. So a lot of good news, and it's, you're seeing it in inventory. Fidelity came across the tape late last week on a coins on exchange, which is a metric that people look at. And since you have transparency, you can see this data. Coins on exchange are at a very low level over the, sort of a 1 year, 3 year basis. So obviously supply and demand, if there aren't any coins there for these treasury accumulation strategies, they got to hit new people, unwilling buyers. So maybe that's why we saw, the pop up again today through 95, and why it's up month to date. There definitely is demand outstripping supply here on Bitcoin.
And then I guess to offset some of this optimism, another soundbite I did pick up on was, as far as pensions, endowments, and some of the real money that's typically and historically invested in alternative investments, I think it will take time for them to update their mandates and their investment policy statements to allow for them to invest. So I think as that happens over the next year, we'll see a lot more capital flowing into crypto.
Yep. And then I agree. Thanks for always trying to, give a not sober, but a balanced approach, which I'm about to imbalance again by saying that the folks like State of Wisconsin, 8th largest pension, bought $150 million worth early on in the ETF, doubled it. So they have about a little over 50 million now. Michigan went in. So there are some smaller ones, but you're right. And I've spoken to some pensions, Bill, and they are not there. But they're also playing off of the Biden-Gensler era playbook. That's how their policy statement was informed. I don't think they've taken on a lot of the change in tenor on that. So we talked a lot about markets. We talked about a little bit about the economy. Can we talk about some of the players? I want to touch on a little bit about the Best in speech. I was interested in highlighting a few points about the IMF edict. I'll just mention one line, which is, I think, and then I'll talk about me trying to get arrested in the LLM arena, playing with some models, and as we say, trying to compress time and advance my initiatives so I can have more time to play with our brand new puppy, who's like having a newborn. Just got one this weekend, Bill.
Boy or girl?
a boy. We've had 2 girl dogs. This is our first boy dog.
What's his name?
Ollie. We got Ollie Boone, from rescue dog from North Carolina.
You should bring him
right.
on, and we'll introduce him to Buster.
And we'll get so Buster's a good 6 months old?
Buster's 7.5 months old now.
7.5 months. All right. I won't cheat you there, Buster.
Yeah.
Yeah, we got about 8-9 weeks with
throughout this. Buster's been sleeping here throughout this podcast without disturbing us.
I could not imagine. I would not be able to have Ollie in here. So.
Yeah. Well, congratulations. That's awesome.
Thank you.
Hey guys, if you got anything out of that last segment, don't forget to like, comment, and subscribe. It really helps us grow the podcast and bring you great content. Thanks for the support.
So the LLM helped me have more time to play with the squeaky toys and clean up after them and all that other good stuff. So I do want to share. So IMF downgraded their growth expectations, and they cut it in half for the U.S. So Scott Bessent in his speech is talking about 1.8% growth in the U.S., 2% inflation. Not exactly great numbers if you're a wage earner. Like if there's 2% inflation and your growth is only 1.8, how are you going to make ends meet? Like just the fact you said that out loud was shocking to me. But let's go to the screen here. Okay. So what I'm sharing here, I took Bessent's speech, threw it into GPT 4 or 5. I forget which one. I have the most recent. And I gave it some instructions. I said, tell me, how does this speech compare to other meaningful shifts in fiscal policy in the U.S. or shocks or events? Who are the winners and losers? And compare those times to Bessent's challenge. And it just produced this. I just copied and pasted this from the chat I had. And it's a good start. Again, it's not a finished product, but it puts things in perspective because Bessent did mention Bretton Woods. And when you go through the speech, he, as I said, takes him to task, says, enough with your climate change, enough with social issues and carbon footprints. We need sustainability, he mentioned 12 times in his speech. And I do think that, like the Plaza Accord, which was a globally coordinated, everybody came with an invitation to the Plaza Hotel in New York City in 1985. They weren't strong-armed into agreements, very different than today. So these LLMs are great to start conversations or initiatives. And, I went on and did some more work. And one point, I invite everybody, we'll have it in the show links, to listen to the speech. I think it might be 3 minutes into the speech where Bessent says, the IMF, I know you all love the word sustainability, and he just absolutely mocks them. I mean, he drips with sarcasm in this one line. And again, where is he saying this? It's the IIF in DC. So he's in Washington, DC, basically saying, I know I'm a DC insider now, but you folks in all of these global organizations are whistling past the graveyard of economic growth. We're dying here. And he says, we need sustainability, economic and fiscal. And then he says stability. And I'm like, wait a minute. Why did he say stability? And he sort of stumbled over it and he goes, and the kind of sustainability, and it goes back to the word sustainability, that will lead to, growth and offset decline demographics. Bill, I looked up the written speech that's on the Treasury website, and stability's not in there. He ad-libbed it or put it in his presentation because stability is so in his brain, at the forefront of his thoughts, because he knows that with a 4.5% or 4.25% rate, like you said, with our 34.5 and growing debt, we are unstable. And that's what that shock that we had in the bond market and the dollar down, he's feeling it. Sustainability is something that is years away. You never know if something's sustainable unless you have, a big rear view mirror, a long view. You don't know. But stable, you feel it. It's like cracked ice. You'll know very soon how thick the ice is and how stable your footing is. So I thought, and I'm spending a minute on this point because I heard it and it didn't sound like, he sounded like he made a mistake in the speech. And then I went back and validated it. So, Liberation Day, we said 26 days old. It is still being felt, my friend. And the last quote I'll talk about is the IMF kicks off their revised earnings by saying the global economic system under which most countries have operated for the last 80 years is being reset, ushering the world into a new era. That's how they open it up. Besant also said that. So there are changes coming. There will be new winners and losers, and you cannot go by the old playbook. So that's my 5 cents. Obviously, the LLMs helped me get through a chunk of data and information. So thanks for your work on getting me up to speed there.
I guess all I have to say is the Plaza Hotel is where Macaulay Culkin lived in Home Alone Part 2. And President Trump actually walked by him and had a brief cameo in Home Alone 2, which is a...
No way. I didn't know that.
Yeah. I watched it many times, so it was hard for me to miss.
And it's now the Trump Plaza.
Yeah, and I'm not sure how that even evolved, but presumably back in 1996 or whenever Home Alone 2 came out, Trump owned it, or else why would he be walking through the lobby? And yeah, I took my kids there and we kind of retraced the Home Alone 2 scenes in Central Park and stuff like that a few years ago.
That's it. You're a good poppy. Bill, yeah. Bringing that appreciation for cultural mores.
Yeah, and that's all I have to add to that discussion of the various huge economic agreements and sort of global repositioning of assets and gold, etc. But it is interesting that Bretton Woods was, coming out of World War II. And this is coming out of, COVID and the last few crazy years. I'm not really sure how to contextualize that, Trump is doing this in 2025. But
yep, we have the same amount of debt to GDP that we did coming out of World War II. And so we had to,
there you go.
We had to do a global reset, and that's what we have to do now. Back to that.
I guess that makes a lot of sense, actually.
Yeah. All right, you want to call time of death here on the? We got.
Yeah.
Anything else did you want to hit?
The only thing I wanted to do is say that my paper on quantitative crypto investing went out on SSRN last week.
Totally.
I'll probably release a podcast that just discusses the paper, so we don't need to go crazy now. But it was an interesting literature review for me and confirmed some of what I thought about, the opportunities in investing in this space. Again, getting back to that prior note, like you might need access to certain markets that are difficult to get unless you are an institution. But I was actually very proud that I replicated a paper substantially and shared a Jupyter notebook through Google Colab that anyone can run. It does a pretty good job of predicting Bitcoin price. Since it is a neural network, I suspect it is like a data mining exercise, and I I'm actually looking forward to step 2 and 3 and 4, which is okay. Now that I've taught a computer how to predict Bitcoin price, like what is actually causing it, and I think that's a lot harder to do when all you do is look at pricing information and find these little indicators. But hopefully we can make it more econometric and come up with a trading strategy and back test it.
Well, I don't know, Bill, if you're understating the result. The R squared was on the order of
99.3 or something. It was very high.
So anyone in this space should take a look at this. You're holding back some of the work on it, though, right? Because we are trying to run a business here too. So we want to give reason, or are you letting the love flow because round 2 is where you really want to do it?
Yeah, I think hopefully we'll start to add more value. But I was actually excited to more or less open source a Bitcoin pricing model that anyone can run. Mark, you actually went into the notebook and ran it, and now you are an operator of a deep neural network Bitcoin pricing model, which means like literally anyone.
Did you catch that, guys? Anybody, even Mark, was able to run the model. It's like Bill was like,
yeah,
that's it.
It's available to boomers, and Mark and I are not boomers, but even boomers could run it.
Yeah, it was pretty cool running it. And 5 years of training data, 2 years of predictability, and it would predict the next hour, right? It would chew it up and
training on the last 3 and then predicting the next hour. So I actually need to do a bit of homework to understand exactly what it's doing. Like deep neural networks was not my educational background.
Bill, people are still trying to understand that Bitcoin's volatility is different than NASDAQ's and it's not correlated. So you're now realizing or seeing how these facts are not appreciated. These baseline facts, like if you take out 3 to 10 days of Bitcoin returns and you sit out those, you're flat on the year.
Yeah.
So all these things aren't appreciated. And what you did and what I ran and saw, I don't think that's appreciated. There's the fact that you have a 24/7 market that you're able to train on and predict hour by hour. The opportunities, this is going to be jumped on very quickly by some folks, including us. So
yeah, and so I'm looking forward to our derivative paper that we'll build on this with the portfolio allocation to a classic global asset allocation portfolio. So starting with 60/40.
Yep.
And then I'm also working on a new paper now, quantitative crypto investing in macro. So hopefully I'll get that out soon.
Yep. And these, besides hitting like and subscribe on these on our podcast, the work that Bill is doing, and then to me on the market side, drive our business. So whether we're an outsourced chief risk officer or whether we are working with firms to help develop practical applications on their investment side for quant investing, it's based on this work. A lot of it's open sourced, but we know that the last mile and the proof is in how to apply it, which is why you need folks like Bill.
Yes, thank you, Mark. And you also need folks like Mark. And so I think that we do put together a nice. We bring a lot of experience with TradFi and just general investment experience over many decades to this new disruptive space. And there's definitely like a buyer beware to all of this. Again, getting back to the Wild West of crypto. And but I think I'm now becoming more and more confident that this is a good place to make money and hopefully risk adjusted. money that's the type of investments that you want to make if you are a pension or an endowment, and
Yep.
The capital will flow to this space.
Yep.
So hopefully people need some help in navigating it.
Amen. Because
Great.
as the IMS said, there's a new sheriff in town, a new economic reset coming. So
I certainly believe that.
Very good.
Well,
all right, folks. We'll see you next week. Hit like and subscribe, and please hit Bill and I up if you have any questions on the topics or the papers.
Thanks, everyone.